Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is Monday, June 17th. We're going to take a look at Louisiana Pacific. This is out of the industrial sector. This is a buildings, products, and equipment supplier out of the industrial sector. If you would take a moment before we get into the video and do me a favor, hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. And drop me down a comment down below. Let me know what you think of the video. Let me know what you think of Louisiana Pacific. Is it in your portfolio? Is it one you're watching? Is it one maybe you're selling? Or is it one you're avoiding altogether? Would love to hear from you. Also, if you have a company like this you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation on a day it pulls back. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. Now, just because it meets 5 of 8 or 6 of 9 if it's a bank or an insurance company does not necessarily mean I'm investing. It just means it makes it onto my watch list. This is an initial screener. And then I do more of a deep dive into the financials, the balance sheet, the income statement to see if I am interested. There's some other metrics that I go through. For that, I do a discounted cash flow analysis, find a price I'm willing to pay, and then wait for the company to fall within that price range. This is also how I look at a company in my portfolio to see if it still meets my investing criteria or at least the initial screener. And then if it doesn't, it's one maybe I should start keeping an eye on. And it's how I set up these videos. So we're going to run through the screener here as we run through the video, and at the end we will see if it meets 5 of 8. It is not a bank, so we will not look at price to book. Now, one thing to note on price to book, I know it says 1 or lower being undervalued, 1 being fair valued, anything over 1 being overvalued for price to book. But that does not necessarily apply to all companies. Companies like this in the industrial sector or out of the information technology sector or the consumer discretionary sector or the consumer staples sector or some of the other sectors outside of banks and insurance companies, you should compare their price to book to other companies in similar segments. So for this company like Louisiana Pacific, you might look at a company that's in my portfolio like Owens Corning and see what their price to book is and see the comparable company there. Though they are not exactly comparable, this one does some different materials than Owens Corning does. Now, if you want to know more about this company, check them out at lpcorp.com. That's lpcorp.com. That is their homepage where I pulled this information from. We're not simply building a solutions company. We have a bigger purpose, using our expertise and innovation to contribute to a better world. Building a better world is why we engineer products that make a difference, help our people get involved in their communities, and ensure our processes remain sustainable for the environment. So their bread and butter is siding, and oriented strand board. And what that is, for those of you who may not know, that would be like your floor underlayment. So whenever you're walking through your home, or some businesses, if they're not on a concrete substrate, that would be your floor, what your carpet is on, or your tile is on, right? Your substrate, your flooring. What that is on, and then that would also be your walls. So you might have some OSB on your walls, you might have some OSB on your floors, it might be your roofing, what your shingles are nailed down to. That would be the wood, composite wood typically. What they do is they take chips of wood and they glue it all together, and that's what oriented strand board really is. And then siding, right? You might have some different types of siding on your house, whether that's the typical, plastic siding or wood shake shingles or something like that. Now, you can see here this map. So they do have locations in South America, and North America here. So all across the American continent here. And you can see, again, oriented strand board, OSB, administrative offices in the red, oriented strand board is the orange, and the siding is the yellow. I don't know if these come through quite, but if you could go to their homepage, you'd be able to see them a little better. It's not really, it doesn't really show up very well the way we use this dot grid matrix here, but all the way from North America to South America, they do have some different locations spread out across the continent, both North and South American continents here. And then you can see, I snipped this here so you can see the other locations. So siding locations, they've got Bath, New York, Dawson Creek, British Columbia, Green Bay, Wisconsin, Hayward, Wisconsin, Holton, Maine, Newberry, Michigan, where I live here. Got a couple of different locations, Pangupuli, Chile, I hope I pronounced that right, Roaring River, North Carolina, Sagola, Michigan, another there in Michigan, Swan Valley, Manitoba, Tomahawk, Wisconsin, Two Harbors, Minnesota, and then the locations for the oriented strand board, OSB, Carthage, Texas, Clark County, Alabama, Ferme, Nueve, Quebec, That's the forestry, so that's probably where they're getting the trees. Hansonville, Alabama. Jasper, Texas. Latorre, Chile. Milwaukee, Quebec. Pangupuli, Chile. Peace Valley, I'm probably butchering some of these names here, but both the siding and strand board here in Chile. Peace Valley, British Columbia, Ponta Grossa, Brazil, Roxborough, North Carolina, and Watkins, Minnesota for the OSB locations. I didn't snip out their headquarters. I mean, if you want to see their administrative offices, again, go check out their homepage. Now, the reason we're taking a look at them down 3.46% on the day, we are talking about Louisiana Pacific Corporation, ticker LPX, out of the industrial sector. Closed out the day at $88.94. Looks like they're down a little bit more in the after hours here whenever I pulled up this information. 52-week range as low as $49.47, as high as $95.70. So they are closer to their 52-week high than their 52-week low. Market cap of $6.374 billion, so a small cap company here. A beta of 1.92, so much more volatile than the overall market, almost twice as volatile, and you can see that volatility throughout the day. Big drop there, recovered, big drop, recovered. Looks like it tried to recover throughout the day, but didn't quite make it. And price to earnings, PE ratio at $24.37 per share. Now, this is higher than the overall market. I think the overall market is sitting somewhere between 22 to 23 right now. 24.37 is a little high, so you definitely want to wait for it to get a little closer to the 52-week low, and this price currently is not within 15% of its 52-week low, not even close, really. It needs to drop down in the 50s. Earnings per share, EPS sitting at $3.64 per share. Earnings date is coming up sometime between July 31st and August 5th. Forward dividend yield is $1.04. They are quarterly payers to divide by 4, though we will see that here in a little bit. 1.13% dividend yield, so low starting dividend yield on this one. Again, if you were to get them closer to the 52-week low, it would obviously be a little bit higher, but I don't think it would quite make it into the 2% range. Ex-dividend date was May 21st. Looks like they paid out in June 5th. So you would be in line for the next dividend if you were to buy them now, but you would have to wait a few months to get that. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated, just one of the sources I like to go to. Looks like they don't expect it to get back up to its 52-week high. They have a $93.67 price target here. Now, we are going to take a look at dividend yield theory. To do that, we look at their 5-year dividend yield average. We compare it to its current, 1.13, 1.13. I know it says forward, same number. And since it is lower, that speaks to overvaluation on this one. So according to the dividend yield theory, this one is potentially overvalued. You need to wait for more of a pullback on this. Now, they do have a low payout ratio, 26.85%. So I do like that. Let's drop down here and look at their free cash flow. We want growing free cash flow over time because dividends tend to grow with the free cash flow. Companies have growing dividends. They tend to reward shareholders with growing dividends as well. So you want growing free cash flow. You can see here 2021, they were at $1.3 billion. 2022, down to $730 million. Down even further in 2023 to $16 million. And then this is trailing 12 months. That's what TTM stands for. So it is going to cover part of the year here in 2024 that we're in, plus part of the year we're at 2023. But it gives you an idea so far what they look like compared to last year. And it looks like they are back on the upswing, $313 million. And you can see here they are repurchasing their own shares. Very aggressive in 2021. Pretty aggressive, though. This would not account for the drop in free cash flow because they did decrease their repurchase as well in 2022. And then 2023 just looks like a bad year all the way around. They had a much lower free cash flow, plus they didn't repurchase any shares. So they are back to what it looks like in 2024 so far. We'll see how 2024 shakes out. So they would not get a check for growing free cash flow over here. It looks like they actually had decreasing free cash flow for the last several years, and they look like they may be back on the upswing. Now we're going to jump over to stockanalysis.com, and I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. You pick any sources that you like. These are just two that I like. Information is easy to look at. It gives you, 4 or 5 years of data to go back, especially stockanalysis.com goes back a little bit further than Yahoo Finance does. And they have 9 analysts that have taken a look at this. They call it a consensus buy. I don't agree with them. I think it needs to drop further down, like I said, back down into the low 60s, high 50s is really where this one would be within 15% of its 52-week. I have not done a discounted cash flow analysis on this one. If anyone has, go ahead and drop it down in the comment section down below. Let me know what you think would be a fair value for this one. They do have a low estimate of $75, which would be a 15.54% decrease from where it currently sits. Average estimate of $87.78, would be a 1.15% decrease. So even their average estimate is lower than where it currently sits. Only way you'd really get any capital appreciation on this one is a high of $110 estimate, which would be a 23.87% increase from where it currently sits. All the while, you could collect that 1.13% dividend yield. Now, I like to get into the financials and look at how efficiently the company is at reinvesting its capital back into itself. That means taking the money that it's investing, whether that's building out new facilities, whether that's remodeling, whether that's making acquisitions. It's just telling you how efficiently the company, paying down debt, repurchasing shares, paying out dividends, how efficiently the company is reinvesting that capital. I like 10% or better here. Return on equity sitting at 16.39%. Beats the 10% I'm looking for. And return on invested capital, same thing, 14.02%, beats the 10% I'm looking for. Now, earnings per share growth, I typically like 5% forecasted over the next 5 years or better. They're sitting at 19.86%. Very high estimated earnings per share growth. Revenue forecasted growth, pretty nice here too. Low single digits here, 5.95%. Very good numbers overall. Just don't like the valuation as far as the stock price goes. Now let's take a look at their dividend history to wrap this one up. As you can see, they are a quarterly payer. Very low payout ratio, 28.42%. I like 75% or lower, so very low payout ratio. They have a lot of room to continue to increase that dividend, to pay down. It gives them a lot of room as well to pay down debt, make acquisitions, continuing to repurchase shares, that sort of thing. So I'd like to see this. Dividend growth, nice dividend growth as well, 8.7%. Not quite double digits, not quite to that 10%, but getting up there. Growth of 6 years. Shareholder yield of 1.18%. I don't know why they didn't put their buyback yield, but they didn't. Now they do pay out on a March, May, September, December timeframe like most companies do. And going back to 2021, you can see their dividend history. They were paying 18 cents, raised it up February 2022 to 22 cents. Again, March 2023 up to 24 cents. And most recently in 2024, February, they raised it up to 26 cents, and that's where it sits to date. So let's run through the screener real quick. So we started with understanding the business, right? It's a building supply company. They produce building supplies, like I said, underlayment for your floors, your walls, the OSB for your walls and your roofs, as well as some siding and a few other products as well, like a building wrap, so your home wraps or your building wrap that goes on the exterior of your home or small office if you were to have a stick-built office. They did not have growing free cash flow over the last 4 years. Growing dividend, they did have a growing dividend, 8%, very nice growth. Dividend payout ratio of 75%, very low payout ratio, under 30% actually, so very good number there. Check valuation based on dividend yield theory, potentially overvalued according to dividend yield theory. Not in my portfolio, so within under my cost basis doesn't apply. It is not within 15% of a 52-week low. Return on invested capital and return on equity, both above 10% that I'm looking for, so check there. And earnings per share growth, almost 20%, so check there. So we did get 1, 2, 3, 4, 5, just makes it under the screener. This would be one I'd throw on my watch list. Might be one to look at and see if you can continue to see if it drops back down below 15% of its 52-week low. Maybe it is starting a downtrend. Owens Corning is another one that is in my portfolio in a similar vein as far as a construction material supplier. I am hoping for a bit of a pullback in that sector. There's a couple of building companies that I'd like to jump into as well, but they are overpriced right now, or at least I feel they're overpriced. Similar to this company, I feel like it's overpriced. Owens Corning in my portfolio, I feel like is overpriced right now. But it does meet 5 of 9, so again, might be worth putting on your watch list and continuing to see where it sits. Maybe it continues to pull back and gives you a bit of an opportunity coming up here in the future. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the best interest community. Drop a comment down below. Let me know what you think of Louisiana Pacific. Gosh, I don't know why it was so hard to get that one out. Louisiana Pacific, again, out of the industrial sector. It is a buildings, products, and equipment supplier. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. Man, having trouble talking today. What's going on?